part of the reason stock prices are high and, of course, interest rates are low is because of central bank monetary policy.
Yes.
Your latest memo, Howard, is called Thinking About Macro, so I have a macro question for you.
Yes.
William McChesney Martin famously said it was the Fed's job to take the punch bowl away just as the party gets going.
Right.
If you were Jay Powell, the Fed chairman, would you be taking the punch bowl away now before the party gets out of control?
You know, the most emphatic thing I want to say is that I am not Jay Powell. I wouldn't know how to do his job. I don't want his job. I don't claim to know better. I would lean toward leaving the markets alone. I talk in the memo about naturally occurring interest rates.
In other words, non-interventionist.
Yes, but, you know, so you might say, well, then you leave the punch bowl. No, they have delivered the punch bowl in their activist role. And so I would like to see the punch bowl removed somewhat so that interest rates are what the economy and the participants want them to be, not what the Fed wants them to be. So, you know, look, they had a hard time raising rates after the global financial crisis, and each time they tried, they got a tantrum, and in early 19, they backed down. And I think they missed the opportunity, and I wouldn't want to miss the opportunity this time to raise rates as the economy is very strong. Now, they claim it's not strong enough yet on the job creation side. But I don't say today, but I say let's not miss the opportunity to let rates float back up.
The central bank appears to be very afraid, fearful of another tantrum.
Yeah.
Are tantrums okay?
You can't. It's like with your kids, and you tell them they have to stop with the screen time. They throw a tantrum. As a parent, we can't be afraid of our kids' tantrums. And the Fed can't be afraid of investors' tantrums. The Fed has to do the right thing for the economy. Its job is not to make money for investors. It has to do the right thing for the economy. And when the economy is strong and unemployment is declining and inflation is threatening, I think you have to let interest rates float back up. You have to stop with the emergency measures and try not to be too late.